Hi, this is Nilesh Gohil from publicangel.com. I want to discuss with you what a lot of property investors are saying right now, that property investing is dead. That's a pretty bold statement, I know, and I've got to admit it winds me up just to say it. But the truth of the matter is that most investors feel that property investing is truly dead. In a way, I suppose I can't blame them for thinking that. Just look at the evidence. The world is going through a financial meltdown. You've all heard of the term credit crunch. Well, I think it's an understatement. It's more like a credit catastrophe. Houses are not selling, finance not available, banks borrowing from the government to stay afloat, interest rates are increasing, more people missing mortgage payments and repossessions on the increase. Increasing fuel prices driving up the price of building materials. It's just a melting pot of bad news. If you're an investor right now, you might be inclined to think you're screwed. All those motivated sellers and no money to buy their properties with. How messed up is that? So maybe it's time for a career change. Maybe it's time to go back to your crappy 9 to 5 job, back to begging for holidays and poor working conditions, long hours and working overtime, back to minimum wage and ultimately back to the rat race. Okay, stop. Just stop for a second. Before we throw in the towel and condemn property investing altogether, let's look at why so many investors are suffering at the moment. I personally think there are two main reasons for investors getting into a financial mess right now. Firstly, a lot of investors took up fixed rate mortgages over 2 years or more and now facing increased mortgage payments. At the moment, it's probably the worst time for an investor to have a fixed rate come to an end. They will now be forced to take a high interest rate deal. The difference could be anything up to £100 per month on a £150,000 mortgage. Now that's a lot of money to find every month if the rent hasn't gone up. But what if they simply move to the cheapest deal going? Then there's no problem, right? Well, wrong. If they move to another deal, then the options are limited. Gone are the days of cheap interest rates, low deposits and minimum rental cover. Investors are being forced to put down larger deposits to reduce the interest payments. And you need to lower the interest payments to fall within the 125% rental cover being demanded by some lenders now. But there's an even bigger problem. Some lenders are asking for more equity in the property for them to lend the money. So if you initially had a low deposit deal before and are coming to an end of a fixed term and the equity in your property hasn't increased sufficiently in value, you then need to raise a deposit to put enough equity back into your property for the next best deal. This is mostly a problem in some areas where houses haven't gone up in value by much, and in some cases prices have actually come down, leading to negative equity. And if you can't pay your mortgage payments, then the banks are going to come knocking on your door, and before you can say repossession, your house will be in the auction being sold for well below its expected market value. Ironic, isn't it? So it's really the banks tightening up on their risk which is stopping the investors from progressing. Then there's the second reason for the increase in investors leaving the property market. A lot of investors were conned into buying off-plan apartments that were overpriced, and 2 years later, when they picked up the keys and the mortgage payments started to kick in, they realised that they can't get the kind of rent they were fooled into believing. So investors ended up with an apartment that wasn't worth the price they originally paid for, and are now subsidising the mortgage payments out of their own pockets. I have very close friends who fell into this trap, and I really feel for them because they jumped into the property ladder without researching the company they were buying from, or without researching the value of properties and their achievable rents. The situation really sucks because my friends put most of their savings into these apartments, and topping up the mortgage payments every month are really taking their toll on their finances. To be perfectly honest, I'm not sure how long they'll be able to hold out. As the number of repossessions increase, more stock is available in the marketplace. This will again drive down the price of properties. I've noticed a lot of for sale boards which have taken root on some houses, some for as many as 6 to 10 months. The chances are that the vendors are still paying mortgage payments on these properties and getting deeper into debt each month. I had a lengthy conversation with a broker recently to get his take on the whole mortgage situation. The results of the conversation wasn't encouraging. Staff from his network were being laid off. The lenders were pulling all high-risk deals. In fact, the most interesting point that came out of that conversation was that the lenders did not want to lend money anymore. The lenders obviously couldn't admit to that, but what they did do was to make it impossible to borrow money. That's why the criteria is so tight. The networks are asking their brokers to push insurance policies and life cover rather than mortgages. That's how bad it really is. Then I asked him how long it will be before we can go back to the happy days of easy finance and cheap deals. His answer, well, you may not like what you're about to hear, but in his opinion, the financial market is in such a bad state that the government wasn't going to do anything rational in the short term, but were concentrating more on the long-term solution. Therefore, we can expect things to get much worse in the short term before they get better. He went on to say that there wasn't going to be any miraculous changes in lending over the next 6 to 12 months in his opinion. To a certain extent I do agree with him. It's not in the interest of the government or the banks to pull out any short-term fixes for this crisis. They would want the financial markets to be stable for the long term. See, I told you the news wasn't good. But where does an investor go from here? Should investors panic and sell up? Should they all give up and go back into employment and back to the rat race? Well, no is the simple answer to that. Okay, look, I need you to think about why you got into property investment in the first place. Freedom, financial independence, security, or whatever your reasons were, they all still apply, because nothing has changed. You can still achieve all these things. Okay, it seems a little harder now, but enough doom and gloom. Let me turn things around here. Now let's concentrate on the positive. My point is, making money in property investing is more difficult, but not impossible. There's still money to be made without a doubt. I should know because I'm still making money, and if I can still do it, then so can you. In difficult times, people lose focus. They sidetrack. They listen to horror stories and believe the newspaper headlines. Then they start to doubt their own judgment. Well, don't. Like I said, people lose focus. So now I want to bring your focus back to where it should be. I want you to focus on the basics. Let me break it down further. There are probably more motivated sellers in the market right now than there ever was. And in my opinion, these numbers will grow. So you should be buying up these properties like there was no tomorrow. And the chances are that you're probably going to make more money from them too. But now you're going to say, I don't have the cash and the banks don't lend me money anymore, right? So then find the money. It's that simple. Find the money. Look everywhere. Look in your bank accounts. Do you have an overdraft facility that you're not utilizing? Well, now's the time to use it. Do you have friends or family who have money in the bank earning very poor interest? Ask them to lend you some. Give them a higher rate of interest in return. Make it worth their while to lend you money. Or make them a partner. Find the investment property and renovate it and let them finance the deposit and the refurbishment costs. Look for deals where you can apply the options strategy. Okay, you need to put a lot of pegs in the right holes, but it should be profitable for you in the long term. Use credit cards to finance your deposit and refurb costs. Use the equity in your own home. Get a network of investors together and pull together your savings and invest in an investment club. Become a sourcing agent for others who do have money and make commissions that way. Do whatever it takes to find the money. I'm a firm believer that when you want something bad enough, the whole world will conspire to help you get it. The key is to think positive and just stay focused. So in closing, I don't think that property investing is dead. In fact, property investing is well and truly alive and kicking. And with more motivated sellers than ever before, and fewer amateur investors getting in the way, it seems that now is the right time to buy property. I hope this video has motivated you enough to keep investing and don't let anyone steer you off track. I've expressed my own opinions in this video, and now I would like to hear yours. There's a discussion taking place right now about this very subject, and it's in your interest to take a look. Thank you for listening.